Good day everyone, I'm Daryl Bendijo from Group 1. So I am the fourth reporter. So my topic is all about interpretation of financial report. Interpreting financial report is a critical skill for investor, creditors, analysis, and management. Financial reports include income statement, balance sheet, and cash flow statement. Provide valuable information about the company's financial performance and position. Here a guide on how to interpret financial report effectively. So first is income statement. Income statements show a company's revenues, expenses, and profitability over a period of time. So revenue. Revenue represents the total sales generated by the company. A significant increase in revenue may indicate growth, while a decline may be a cause of concern. So, revenue. So, ang revenue mao ni ang total sales ninyo or total income sa inyong company. So, ma-determine siya if increase ang inyong revenue, matawag na siya growth. While kung decrease or baba is na siya matawag siya decline. Next is expenses. Analyze various expense categories such as cost of goods sold, operating expense, interest expense. Determine if expenses are well controlled if they are in line with revenue. So expenses, so ang expenses na siya categories. First is cost of goods sold. So ang cost of goods sold is mo na siya ang total na sa imuhang expenses sa paghimo sa imong product. So operating expense, so mao po ni siya ang expenses sa pag-operate sa imong business or paghimo sa imong product. Ana di ang labor sa inyong trabahante o mga maintenance sa inyong equipment. Interest expense, so mao ni siya ang murag interest sa inyong company if nay utang or gihulam sa bangko. So ang expense is ma-determine if ang inyong expense is na-align sa inyong revenue or wala nag sobra. So dapat mas taas ang revenue kaysa sa expense. So gross profit margin. Gross profit margin measures the profitability of core operation. A higher margin indicates efficiency in producing goods or services. So ang gross profit margin is mag-measure sa profitability that show the percentage of revenue that exceed by the COGS or cost of goods sold. So ma-determine ang inyong revenue if ma-analyze na ninyo or mabalaan ninyo ang inyong cost of goods sold o ang tibok ninyong expenses sa inyong product. Next is profit margin. Net profit margin reflects how much profit the company retains after all the expenses. A declining net margin may indicate cost of pressures. So, net profit margin is mo na siya ang inyong basihan sa inyong company if pila inyong halin or inyong income. So after na bala ninyo ang expense, minusan ninyo sa inyong expense. So if ang inyong margin is decline, so na siya matawag siya og cost pressure. Next is earn before interest and taxes or EBIT. EBIT shows the profitability before accounting for interest and taxes. It can be revealed operational efficiency. So ang earning before interest, tax and taxes, so kabantay mo itong Itong gipahimo ni sir sa tuwa na income statement. So ang first is wala pa gimay na sa nog interest. So mo na siyang total nilang revenue tong sa income statement man to. Second is earning per share or EPS. EPS measure the profit attributable to each outstanding shares of common stock. Positive growth in EPC is typically favorable. So ang earning per share o mo na siya ang pag-measure sa profit sa mahatag sa imuhang mga shareholders. So kuha naman siya na siya ay formula. Earning per share equals net income minus preferred dividends divide with average number of share outstanding. Second is balance sheet. Balance sheet is a financial statement that contains details of a company's assets or liabilities at a specific point in time. So first is asset. Asset examine the composition of assets, including current asset and long-term asset. Assess the company's abilities to meet short-term and long-term obligations. So example sa asset is cash, accounts receivable, equipment, or buildings. So ang meaning sa asset is anything that has current or future economic value to a business. Second is liabilities. Liabilities analyze the nature of liabilities, such as current liabilities and long-term liabilities. High levels of them may be post-solvency risk. So example sa liabilities is account payable, salaries payable, interest payable, income tax liability. So mo ni ang mga expenses sa company. So meaning sa liabilities are what a business owns. It could be money, goods, or service. Third is shareholders' equity. Assess the company's net worth, which is shareholders' equity. A positive equity balance indicates the company's assets exceed its liability. So ang shareholders' equity may be calculated by subtracting its total liabilities from its total assets. Working capital. Calculate the difference between current assets and current liabilities. Positive working capital is generally preferred for all short-term stability. So, ang working capital is subtract company's current liabilities from its current assets. So, ang importance sa working capital is guarantee that a business has adequate cash on hand to meet its short-term financial responsibilities. So third is cash flow statement. A cash flow statement is a financial statement that shows how cash entered and exit a company during a accounting period. Operating cash flow. Operating cash flow. This section shows how much cash the company generates from its core operation. Positive operation cash flow is a sign of a healthy business model. So, operating cash flow is mo ni siya ang mag-measure of the amount of the cash generated by a company's normal business operation. So, if ang imuhang operating cash flow is positive, matawag siya og healthy business model. Next, investing cash flow. Analyze cash flow related to investment in asset. Example, property, equipment, acquisition. Significance, negative cash flow may indicate aggressive expansion. So, investing cash flow, mo ni ang section of cash flow statement that show the cash generated or expense or imong nagasto relating to investment activities. So, ang example ani is purchase of physical asset, investment in securities. So, if ang imong investing cash flow is negative, so matawag siya og aggressive expansion. Next is financing cash flow. Assess cash flow from financing activities, including debt issuance, stock repurchase, and dividend payment. High debt issuance could raise concern about solvency. So, cash flow in financing. So, is a form of financing which a loan made to a company is backed by the company's expected cash flow.